I'm looking for three things in this upcoming earnings season. The first is, can we have a repeat or a follow through on the AI craze that drove tech, last quarter? If you have these companies that are so leveraged to the AI story, basically push out or say that, well, last quarter was a head fake or something like that, that's going to be a big headwind for stocks because of where the tech sector sits within the index. The second one I want to see is, we're basically, the supply chain is open and the demand for industrials, cyclical industrials specifically, that had their backlog was extended because the supply chain was all gunked up. Well, now that demand is coming through. So will their backlog be able to grow with true demand, not pushed out because of the supply chain? I think that's going to be crucial to see if the cyclical rally that we've seen in industrial stocks in particular is actually true or not. And finally, we're going to get, starting tomorrow, a whole host of regional banks reporting earnings. And obviously we know with the West Coast banks that failed back in March, what's been the deposit beta for those regional banks? What type of loan profile have been they restricting from issuing new loans? How are they operating in an inverted yield curve where they're having to pay up for deposits, but they're loaning at lower interest rates, so their net interest margin is really impacted. So I'm really curious to see those three things. Can AI have a follow through? Is the backlog for industrial cyclicals really true going forward? And how are the regional banks stacking up in a post failure of the West Coast banks?